gentlemen, good day and welcome to the JK Lakshmi Cement Q3 and 9-month FY2024 earnings conference call hosted by PhillipCapital India Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vaibhav Agarwal from PhillipCapital. Thank you, and over to you, sir.
Thank you, Rayo. Good evening, everyone. On behalf of PhillipCapital India Private Limited, we welcome you to the Q3 and 9-month FY24 call of JK Lakshmi Cement. I need to highlight that JK Lakshmi Cement is also the holding company of Udaipur Cement Works Limited, and therefore this call is also open for discussion about the performance of Udaipur Cement Works Limited. On the call, we have with us Mr. Arun Kumar Shukla, President and Director, and Mr. Sudhir Vidkar, CFO of JK Lakshmi Cement. I would like to mention on behalf of JK Lakshmi Cement and its management that certain statements that we made or discussed on this conference call may be forward-looking statements related to future developments based on current expectations. These statements are subject to a number of risks, uncertainties, and other important factors which may cause actual developments and results to differ materially from the statements made. JK Lakshmi Cement Limited and the management of the company assumes no obligation to publicly update or alter these forward-looking statements, whether as a result of new information or future events or otherwise. I will now hand over the floor to the manager of JK Lakshmi Cement for the opening remarks, which will be followed by interactive Q&A. Thank you, and over to you, sir.
Thank you, Mr. Vaibhav, and good afternoon, good evening, rather, ladies and gentlemen, for this Q3 call for the JK Lakshmi FY24. You would have already seen the results and our press release. So, nothing much to talk on that you would have absorbed. So, we'll now throw the floor open for question answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. We take the first question from the line of Shravan Shah from Dolat Capital. Please go ahead.
Thank you, sir. First of all, congratulations on good set of numbers. Sir, before asking a question, just a clarification needed. We have removed our outsource volume from our numbers. So, if you can help us with the revised volume number for last 4 quarters of FY23, third quarter we already have, and the 2 quarters of Q1 FY24 and Q2 FY24, because it seems because of that the realization seems to be a much higher QOQ. So just wanted to understand the revised numbers, and is it now this is the new normal volume number? So despite the volume reducing outsource, there is no impact on the revenue front.
Yeah, you are right. This is going to be new normal first and foremost to answer your question. And the first, you should all analysts understand the reason as to why we have done that. For last almost 7-8 quarters, we on all our Concalls have been talking of seeing the profitability in numbers, but especially the per ton numbers on consolidated basis. Still, I find most of the analysts are publishing standalone per ton analysis. That distorts the figure. I'll tell you why. You see, for the simple reason, if UCWL is procuring some cement from us and then selling it to market, that volume when you report on a standalone basis gets counted as sales both for JK Lakshmi as well as Udaipur. Ultimately, from market we realize only X profit, which gets divided in 2 companies. So what we have decided, the company which ultimately sells in the market should show that as the sales. That's why when you would see, when you add the standalone reported number of JKLC plus standalone reported numbers, volume, I'm talking sales volume of UCWL, earlier there used to be huge inter-unit sale which used to be knocked off for doing the consolidation. This time there would not be any need for doing that because we have taken at one place. So it is going to be the new normal. Regarding your question of past data, we'll share that separately. You can put up the mail and our team will answer. It will be difficult for you and for other people who are in the queue to note down all the numbers for 4 quarters which you want. You can send the mail, we can answer that. But as you rightly said, going to be the new normal. Going forward, you would have also seen in our press release and in our reporting to the stock exchange that the board has decided to form a committee of executive to consider and evaluate the possibility of the restructuring. We have been talking of this consolidation of the two businesses, UCW and JKLC, for quite some time. But now the opportune time has come that we start seriously having a look at it, and hopefully somewhere next year, we will announce at appropriate time the plan to consolidate the businesses. So that is, once that happens, then obviously there will not be any reason and the need for any inter-unit sale because UCWL and JKLC will be one company and UCWL will be another plant or division of JK Lakshmi only as a part of the company. Only a little bit of outsource which we are doing from some third-party outsource, that is very negligible and will not distort the figures. But yes, this is going to be the new normal going forward. We'll share the numbers. You send us the mail what you want, right? Thank you, Shivan.
Yeah. Sir, now in terms of coming to the volume, so 9 month, 6.6% volume growth, and we were looking at last time, say 12 to 15% volume growth. So what kind of new growth we can look at for FY24? So particularly fourth quarter, how much kind of a volume growth we are looking at? So for that also we need a fourth quarter of FY23, the revised volume number. So that's the first one.
Yeah, so the volume growth number which we have told before was based on some assumptions and market growth, and there has been, the area where we operate some, disruption, like, north, we had, severe cold and this graph restrictions, construction activities were not happening. So that has impacted quite a bit. So that is why, in the last call also we had told that we are going to moderate our numbers. So yes, our volume growth in the last quarter, volume growth was 8%. And going forward, we see that, growth is going to be, because January, March typically is high month, right? And the base is very high, so I see that growth is going to be almost in the similar fashion what we have achieved in the last 9 months. So maybe around, 8 to 10% kind of range I believe.
Okay. Sir, now coming particularly on the expansion and the capex and the debt things. So if you can help us in terms of how much capex in the 9 months we have done, what's the new number for this year, FY25, FY26, and also at the same time in terms of the expansions that we have announced at the Durg also and the acquisition in the northeast. So there also we are looking at a expansion. So if you can help us in terms of when each and every grinding unit and the clinker unit in terms of the timeline will be coming and how much capex we will be doing in the fourth quarter, FY25, FY26, that would be helpful. And ultimately the net debt which we were looking at the peak net debt at Concall level closer to 1,800 odd crores. So now what kind of peak debt we can look at?
Yeah. We have announced some projects in this board meeting. One is, apart from the normal capex which is happening, we are already in the 2-3 things which we are doing. One, we have announced a railway siding project of 325 crores. That will be implemented in 2 phases. First phase by September of 24. And the second phase by March of 26. So out of that 325, about 105 will be part of the phase 2. So balance, that is around 200 to 220 would get spent by September of 26. That is number one, as far as railway siding is concerned, and the balance of 105 in about 12 to 18 months time thereafter. And then we have also announced the expansion of our Durg plant, which involves adding a clinker line of 2.3 million and 4 grinding units with an aggregate capacity of 4.6 million tons. So again, that will be in phases. First phase would involve about 1 million ton in UP and another 1.2 million in UP and 1.2 in Durg. So that will take about 2 years' time. And we are talking a capex of close for the entire project of 2,500 crores. So maybe 1,500 to 1,600 crores get commissioned or get incurred in those first 2 years by March of 26. We need maybe about, I would say, 40% coming in the first year, which is FY25, and 60% in the next year. Broadly, I'm telling you. You have to just do the fine numbers there in quarter-wise process. And that involves fundraising of close to about 2,500 crores, which is basically 1,750 for the Durg project, 250 for the railway siding, and for our other aspirations, about 500 crores, which includes the ongoing projects like the AFR project and the waste heat recovery project, where we are adding, plus also some solar power plant which we are doing at the Siroi. So all that will be about 500 crores. So we are talking of a fundraising of 2,500 crores over the next 3 years' time. Maybe about 500 to 700 gets in this FY25, and another maybe 1,000 in FY26 and balance thereafter.
Okay, got it. Sir, if you can still help us in terms of the total combine everything put together, capex for fourth quarter, FY25 and FY26 would be how much?
We need to work on. Broadly, I've given the high-level numbers. We have just announced the project. We have to break it down quarter-wise, and maybe next call I will be able to give the exact numbers. But broadly, I've given you a broad indication of the quantum of the capex as well as the term loan.
Thank you. Before we take the next question, a reminder to participants to press star and 1 to join the question queue. The next question is from the line of Prateek Kumar from Jefferies. Please go ahead.
Hello. Yeah, good evening, sir, and congrats for great results. My first question is on your expansion. Would you be able to give any reason for choosing east over north or any other market for your first round of expansion up to UCW?
Sorry, couldn't get your question. Can you repeat it? It was echoing.
Can you just highlight any specific reason we looked at Durg expansion earlier than some of your north expansion, which you were also talking about earlier, in terms of order expansion? Is it related to the readiness of the site or any other reason which we have, which you can cite here?
We are in the process of completing a north expansion. Udaipur will be completing hopefully towards the end of this quarter. So they will need some time to stabilize before we embark on next expansion in the northwest. That's why we chose, and considering the demand-supply mismatch there in the eastern side and the expected growth in the demand in that region, we chose east as the preferred market to go for the next round of expansion. But yes, once this expansion gets stabilized at Udaipur, maybe then we will have a look at the expanding in northwest.
Yes, adding to that what Mr. Vitkar said, you must have seen that capacity utilization of our Durg unit is almost done, exhausted. And the highest growth in the entire India is eastern region. And typically I'm talking of those markets where we operate, because we do not operate in the entire east. So that was one reason. And if you could look at, our 30-30 plan, our plan was to expand Durg, our plan was to put up, next line in Udaipur and then Nagaur and Kutch. So we are just on the track, whatever we, the roadmap which we prepared for ourselves, we are following that. So I think this is almost as per the plan which we are kind of going ahead with.
Sure. Including, we have, for the Northeast acquisition, we have talked about only mine is as of now around 300 crore rupees, and initial capacity of only 1 million ton, for which we have not cited any capex. So you said 2,500 crore capex is for east operation, 325 crore is for rail siding, maybe 100 crore annually. 300 crore is like adding up to 3 years of capex, excluding Northeast. Including Northeast, will like close to 5,000 crore of capex for us in next 3 years.
Yeah, we are talking of a capex of 2,500 crores for the Durg expansion, which will take about 2 to 3 years. About the ongoing project is about 200 crores. Then the railway siding, 300 crores. So that is 3,000 crores. Maybe 1,000 for the Northeast, so 4,000 crores over the next 3 years.
All right. And just related to previous question, can you just give, for the benefit of everyone, I'm sure everyone is looking for your volume number, restated volume numbers of past 3 quarters, and maybe annual FY23 volume.
Yeah, we'll provide you that. Yeah. So I think what you want is net of that, outsource rate.
That we have already given in the press release, both for 9 months as well as this thing. Waterwise we'll share.
Sure. Okay, I'll get back to this. Thank you.
Yeah, thank you.
Thank you. Participants who wish to ask questions, please press star and 1 on your touchtone telephone. The next question is from Noel Vaz from Union Mutual Fund. Please go ahead.
Yes, thank you for the opportunity. So I had the question about Udaipur cement. Now my information might be a little incorrect, but I just wanted to know, is there any issue of limestone availability or limestone shortage at the Udaipur cement plant? Yeah, that's all.
There's absolutely no shortage of limestone reserve. In fact, there was one additional mine which they have recently acquired. So, in fact, their reserves at the present, after this expansion also would be good enough for another 40-45 years. And we are thinking going forward, as I mentioned in response to earlier question, could be possibility of another line. So, there is no any paucity of limestone reserve at that plant in Udaipur.
Okay. And just to clarify, so I think the company is trying to finish off with the Udaipur expansion, then Durg, and then at Udaipur cement works itself. I think that is the order, right? Okay.
Yeah.
Okay, thanks for confirming that. Yeah, that is all.
Thank you.
Thank you. Participants who wish to ask questions may press star and 1. The next question is from Rajesh Prasad Ravi from HDFC Securities. Please go ahead.
Hello. Good evening, sir. Am I audible?
Yeah. Thank you.
Yeah, right, sir. First, could you share on the trade, non-trade mix and blended cement and the fuel cost for this quarter, and then Q3 volumes, the restated volume for Q2, if it is available, please.
Is this quarter our fuel cost was 8,700 rupees, which is around 1.78 kcal. And regarding your question on the
trade mix and blended cement.
So trade quarter 3 was 58%, which is up by 3% from previous quarter. 58% here, and blended is 65%, and 35% is.
And these numbers are standalone or console, sir? Blended and trade?
The console number.
Console numbers, okay. And second, what is your thought process on the Udaipur ramp up with the clinker plant now operational? Why are you still looking at 7-8% sort of volume growth? And for next year, what sort of ramp up you are looking at, given that even your grinding unit also will be available by March end?
Yeah. So I'll just clarify. Whatever industry is growing at will grow higher than them. And as I told, last quarter also we have grown by 8% in volume, which is better than industry. Industry, to my estimate, is about 6-7%. One. Even in this quarter also, our growth is going to be better than industry. Second, once that Udaipur capacity comes 2.5 million ton, our growth is going to be much higher, right? So next year, I think we are going to grow. Industry growth is envisaged to be about 8%. Our growth with additional capacity at Udaipur, we are looking at somewhere around early to two-digit number.
Okay, and two last questions. Q2 volumes, if you have handy, the like volumes in Q2, and why your in the console volumes when you need to knock off again outsource volume, because even the console numbers have come down by 5% versus the prior reported numbers.
That's why I told you, because of that outsource is minimal. In the second quarter we had for JK Lakshmi the volume was 21.7 and for UCW 5.6, total 27.32.
Okay, sir. And lastly, in thought process on this entering into the Northeast, and by when do you expect this project to be on stream, and what is your thought, given that market is quite consolidated between two players, Almia and Star?
Northeast, I think we have kind of by now that we do have interest in Northeast, and because Northeast is one of the markets which form part of Eastern India, and we want to consolidate our position there. This is one reason. Second, of course, I think demand supply situation also favors going to that market, apart from the price which is prevailing in that market.
Okay, and by when you are looking to start work on that project, sir?
I think we are just working out the timeline. We'll come back maybe next time.
Sure.
To give some, it's too premature for us to give a timeline. Next call we should be hopefully able to answer that.
Great, sir. All the best. Thank you.
Thank you, Mr. Rajesh.
Thank you. Participants who wish to ask questions may press star and 1. The next question is from Narendra from Robo Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. Am I audible?
Yeah, thanks.
Yeah, hi. So my questions are specifically pertaining to UCWL. So what would be our peak utilization levels there, and by when do we expect to reach those levels? If you could throw some light on that.
Talking of the existing capacity which we have at Udaipur?
No, the expanded capacity.
So the plan is right now, whatever capacity we have gradually ramped it up to about 75% now. And the plan is a new line which is coming up. Maybe first year is going to be about 60%, next year 75%, and thereon 80%.
Okay. So 25 would be 50%, and 26 would be around 75%, right?
Yeah.
Right.
Yeah. Okay, got it. And I believe we had a target at UCWL to reach top 5 players in terms of EBITDA per ton. So what's the target on EBITDA per ton for UCWL?
Yeah, so I think we look at UCWL and JKLC combined, because that is what matters to us, right?
Okay.
We have seen last 2 quarters, I think we have been improving with respect to our EBITDA ramp up. If you also look at the gap which we had before with the leaders, we have squeezed that up to an extent. Going forward also, our plan is to consolidate at this level whatever we achieve, because we have been talking about 1,000 rupees EBITDA per ton, which we have achieved now. We need to consolidate this on a consistent basis, and going forward, yes, the kind of plan and the actions which we have in place, the top 5 company, EBITDA earning company in the industry, yes, that looks quite feasible, and we are happy the way we are progressing. So all those actions are getting realized and we are progressing well. So we are satisfied with it.
Okay. Got it. Thanks so much and all the best.
Thank you.
Thank you. Participants who wish to ask questions, please press star and 1. The next question is from Aman Agarwal from Equirus Securities. Please go ahead.
Yes, sir. Thank you for the opportunity and congratulations on strong performance once again. So my question was once again on the reason why we went up the eastern market, especially with the split grinding units in UP, Bihar, and Jharkhand. Now, while we are aware that UP market is doing quite well in demand sense, Bihar and Jharkhand, we hear that it has been the demand has been subdued for quite a few quarters now. Further, this I think will also have some impact on our geo mix improvement target, which we have set for ourselves. So just wanted your views around this.
Yeah, so I think Bihar also, you have to divide that market into further geographies like North Bihar and South Bihar, right? So if you look at North Bihar geography, that geography is better in terms of demand and supply situation on and also on pricing front. Our plan is to go somewhere in North Bihar, right? And Jharkhand also, where we plan to go going forward. I think we are choosing an area where from I think, yes, it is going to be better to, serve our customers. Second, I think demand supply situation is good. And third, also the price trajectory is also favorable. So I think we have done, our homework and groundwork before deciding onto this. Another issue was that, we have been capturing, part of the growth of eastern market, which is, Chhattisgarh and neighboring areas. But I believe that individual home builder segment, which is the highest in case of, east, I think that is going to drive the growth going forward, right? And perhaps, individual home builder segment in that, geography where we plan to go going forward is quite sizable, right? So that was the rationale as to why we chose, to go to that market, right? If I look at, eastern market growth, I think growth of eastern market is the highest in all zones in India, be it, north, central, south, or, west, right? Going forward also, I believe that, this is going to be there for some time as to, individual home builder segment which is ever growing and that is going to really kind of, consume all those capacities which are going to be installed going forward. If you look at, demand supply gap also, I think though capacity has been added in east, but I think still I think the gap is reducing, if you look at maybe 1.5 year how industry has performed, gap has gone down. And going forward, I think it will further go down despite capacities are being added. This is what our, estimation or the, I would say, presumption for that market is.
Understood, sir. That's really helpful. And sir, as we expand, pretty aggressively for our own capacities, would that mean we would be trimming down our dependence? Obviously, it's low already, but we would be further reducing our dependence on outsourcing?
Yes, so I think the strategy is we are going to be kind of, be dependent on ourselves, our capabilities to produce clinker, our, capability to grind it. And if you see our, 30-30 roadmap, which we have, told to all of you, I think the clear-cut roadmap is there at least now for, 24-25 million tons. Nagaur and Kutch already, I think, work in progress, which will take some time because of, all those prerequisite processes are going on, right? So, yes, we are going to be self-dependent in terms of grinding and producing.
Understood, sir. Understood. And sir, lastly, Jarli would continue to, for Jarli will continue to purchase clinker from external market. Any plans around that?
So, Jarli, I think we have, in-house clinker only. We don't purchase from outside.
Okay, I'll check that. Sure, sir. So, thank you.
Thank you. The next question is from Naveen Sahadev from ICICI Securities. Please go ahead.
Yeah, good evening, and thank you for the opportunity. And Shukla, congratulations on 1,000 rupee plus EBITDA per ton as you had promised. So great to see.
Good evening, Naveen. I think we had discussion over this, so I think now we are there.
Absolutely. So I just recall that as soon as you had joined, you had said 1,000 rupee EBITDA per ton at the mark, and so congratulations on that. Sir, a couple of questions. So the volume growth of roughly 8% that we have seen, is it fair to assume that it was more biased in favor of north region because east would have been slightly slow, or how should one look at the breakup between north and east?
I think growth is in favor of east. I told you that, east is going at a faster pace than other geographies of India. A little bit more skewed towards east.
Even in the current quarter, it was more skewed towards east, you're saying?
Yeah.
Understood. And sir, realization-wise, how should one look at, because in February, we believe there has been decent corrections in Jan and February. So how would you look at realizations as on date versus the previous quarter? What kind of impact would you suggest would have happened?
So I think January, March, usually demand is good and is going to be good in remainder of the February and March. Price-wise, yes, I think there has been softening in the prices in different markets, for sure. It would be difficult to quantify as to how much softening has happened, but yes, softening has definitely happened in the month of January to an extent and even in February.
Understood. Sir, just one or two more questions, if I may. The split grinding units, I was just checking the distance. Let's say Durg to Madhubani, Bihar, is roughly 900 plus kilometers. So with that kind of a huge distance, would it not impact profitability? How should one? Because it's like it's almost 1,000 kilometers, I'm saying, from Durg, the location. So how should one look at it? And in the same breath, do we have this arrangement with Kanoria, if I'm not wrong, in the same market and which will displace that? Or that's in a different market? Thanks.
No. I think we do not have any association with a third party in that market, in the market which you are talking about. As far as that, kilometer and other things you mentioned, I think we have done our calculation and that makes sense, because even today from our Durg unit, wherever we are selling, I think some of the markets are as good or as bad as the market which you mentioned, right? So we have done our calculation. That makes sense to go to that market because we are also, betting on the future, because I personally we see that market is going to grow at a much faster pace than other, and once market growth is there, then price also comes along with that.
Understood. And just one last question. We purchased, or we have agreed to purchase 85% in this northeast entity, and it is for conceptualizing cement plant. So the balance 15% would also, I think it's the existing promoters. So would they also put in any equity, anything for the proposed capex, or it is us who will lead the entire expansion?
Yeah, obviously they would put in if they are partners in that.
So up to 15% in proportion to the equity that there is being shared, right?
Yeah.
Great. Thank you so much for this, and once again, congratulations on very good set of numbers.
Thanks, Naveen. Thank you.
Thank you. Next question is from Mudit Agarwal from Motilal Oswal Financial Services. Please go ahead.
Hello. Good evening, sir. I have some questions and some clarifications. Just wanted to know about this Surat grinding unit brownfield expansion. Is that plan is intact or any changes on that side?
There is no change in that plan. That is going as per the plan.
Okay. And sir, you mentioned 4,000 crore of total capex, including northeast. Is it the right?
Yeah, you're right.
3,000 crore. Okay. And one more clarification.
clarification, sir, about this Amethi grinding unit, which is on a tolling basis. So is it for exclusively for JK Lakshmi, or is it shared with other industry players?
So this grinding unit is being shared by other industry players also.
Okay. So sir, can you just throw some light on how it is, how this arrangement is for the JK Lakshmi particularly?
I didn't get what you.
I mean, what are the capacity which we are sharing, and how much is the JK Lakshmi share?
I think we do have tooling contract with them. I think those other players they must be having a different contract. We are having our own contract with them, and based on that zero-based costing, we have worked out some contracting arrangements, right? So that is how we operate, right? So
okay, so in simple words, like how much volume we are getting from that unit?
So we are sharing about maybe 50% of it.
Okay. Understand. Thank you, sir. That's all my question.
Thank you. The next question is from Uttar Kumar Srimal from Axis Securities. Please go ahead.
Yeah. Good evening, sir. Thanks for the opportunity and congratulations on good set of numbers. Sir, my question pertains to EBITDA ton. This quarter we have done over 1,000 rupees EBITDA ton, and we have achieved our target earlier than what we had envisaged. So this EBITDA ton is sustainable moving ahead also, sir?
So our endeavor, Uttamji, is to be amongst top 5 players because market dynamics keep on changing, right? So our effort is EBITDA goes to even 1,500-1,600 also for others. We should also be moving in the same direction. If it goes down, because of the regions, then I think it will go down for us also. Now, what we can do, what is within our control is to really all those internal, drivers of margins. So that I think we are driving that. I would say we have accomplished part of those, levers, right? Going forward, also we are going to work on those levers and further consolidate on those things. So I think I would put like, being top 5 amongst, EBITDA per ton company, that is what our endeavor is. If others go up, then we'll go up more than them. This is what I would say.
Okay, sir. And sir, what was lead distance and premium cement sale percentage as a percentage of trade sale during this quarter?
Yeah. So lead was 377, I suppose. Yes. 377? Yeah.
And premium cement, sir?
Premium cement was 12% of the overall volume.
12% of overall volume, not and out of trade?
25% of trade, right?
25%. And sir, how was VAP sale during this quarter, value-added product?
So here also I think we have done quite well. So value-added has contributed about 134 crore. 134 crore this quarter. Okay. And the major contribution is from RMC, which is 67 crore, followed by UP and AC block.
Okay. Yeah, Bitkar sir, one question. Last quarter in FY23, our volume was 2.32 million tons, and this quarter it is 2.36. So there is a growth of only 2%. So if you can clarify on the same.
Come again, can you repeat your question?
Sir, last quarter 3 FY23, volume on a standalone basis was 2.32. As per your press release, and this quarter this is 2.36. So there is a growth of only 2%. So we are seeing around 8% growth. So if you can clarify on that.
Consolidated is 8%, right?
Okay.
If you take only cement, the growth is 5%. So degrowth is there in case of clinker sale, which we kind of not encourage, right?
Okay, sir. That's all from my side, and all the best to all of you. Yeah, thanks.
Thank you.
Thank you very much. Before we take the next question, a final reminder to participants that you may press star and 1 to join the question queue. No further reminders would be announced. The next question is from Parth Bhavsar from Investec. Please go ahead.
Hi, sir. Thank you for the opportunity. I have 2 questions. sir, Durg will be serving your split grinding announcements, right?
So voice is echoing. Can you repeat? Hear you, please.
Just a second. Hello. Yeah, you can hear me now? Hello.
Slightly better.
Yeah. So just wanted to understand that Durg will be, supplying clinker to your split grinding units, right?
Yeah.
Yeah. So, sir, what sort of mineable reserves do we have at Durg?
So, with additional 2.3 million ton which we plan to have, it's going to be about, 50 years. 45 to 50 years.
45 to 50 years, okay. But this would be like, this is on the base of the 8 million ton grinding you announced, right?
Right, yeah.
Okay.
Because typically all these markets, they are heavy on blended cement, right? So blended cement is to the extent of about 80%, 85%.
So can we assume like the clinker factor would be around 1.67 times? 1.67?
Yeah.
Okay. And sir, the other thing is like to maybe target east in the future. Wanted to understand if we are bidding for any limestone auctions in the east, or have we recently won any limestone mines in east?
No, not in the near future. Near past.
In East we have not won any. We have only one in the recent
past. And are we bidding for any?
Other than that, we have not done.
Are we bidding for any?
There is nothing in the offing as far as my information goes.
Okay. Perfect, sir. Those are my questions, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Devesh Agarwal from IIFL. Please go ahead.
Yeah, thank you for the opportunity, sir. Sir, again, just to understand a bit better, this exclusion of outsourced volumes, is it because are we planning to scale down the outsourcing operations, or was there any double counting, and that's the reason we have now decided to exclude this?
Two reasons. Broadly, right, you are right. One, there was double counting for UCWL. That's why we have done that, number one. And the other one is we are scaling down considerably going forward the outsource. So effectively, that will be negligible. It doesn't make sense to consider them. And Udaipur was a case of a double counting, which we have been saying for quite some time now. So ultimately, we decided to do it ourselves rather than you seeing it on a console basis.
And if you were to just make number comparable, sir, this quarter compared to the previous reported numbers, what would be the volume addition that we have to do for the quarter in terms of what was the volume from outsourced units?
It would be better to exclude the outsource model from the earlier one rather than clubbing it again and running into the same problem for which we have decided to start the new practice. And in any case, going forward, as you mentioned, we are seriously considering as consolidation next year. So obviously this double counting, etc. will go away and the volume from the outsourcing will considerably get reduced.
Right. And sir, any number that you can share in terms of the profitability that was getting added because of this conversion or tolling volumes, or any cost that we were paying to the tolling operator?
That was that's why it was very negligible, and just because of the volume distorting the actual real profitability of the company. So it was negligible only. No volume, negligible profitability doesn't make sense to add. And double counting obviously was the reason main for the UCWS.
Understood. Thank you.
Thank you.
Thank you. Next question is from the line of Keshav Lahoti from HDFC Securities. Please go ahead.
Hello. Thank you for the opportunity. Sir, congratulations on 4-digit EBITDA per ton. Firstly,
thank you.
Coming on the capex side, what is the capex for the 9-month and FY24? I think that number might be handy right now.
Yeah, that we can share that with you. In 9 months period, we have done about 250 crores of capex in JK Lakshmi, and in UCWL in 9 months about 450 crores. 250 for JK Lakshmi and 450 for UCWL.
Okay, got it. The green power share, you said 35% for this quarter?
Green power share, what we are saying is after the Durg arrangement, Durg has already touched 80% thereafter. And in this quarter, the green one is about 44%.
Okay, 44. So this quarter, Durg was fully operational, right? For the entire quarter. So
yes. Yeah, almost fully operational. So
okay,
there it was almost we reached 70% in the Durg.
Like what I want to understand, like this 44% might increase in next quarter due to Durg. Is it a possibility in Q4?
Marginal, because they already touched 70. It might have maximum go up to 80. So marginal increase could be there. But our aim is to first graduate to 50 on a company basis and take it forward from there.
Okay, got it. And how is the fuel cost expected to be in Q4?
This quarter it was about 1.78, maybe marginally lower, 1.7, around 1.7 or so.
Okay. Last question from my side. As you're expecting 8 to 10% volume growth in Q4, so have we seen similar volume growth in Jan, like Jan has already passed?
Yeah, so Jan was good, I think around that only. So as I told you, I think we are doing better than industry in terms of growth. And one thing I think you should remember that during peak period, because almost I think waste is very high, right? And capacity is almost exhausted. So you do not have headroom to grow further, right? So January, March is something which, comes out of other lever, like, more of, blended cement, more of, other things, right? So that your throughput goes up and production goes up. So that is what we are trying, right? January, March, I think is muted growth because of these reasons. Because we have already achieved our, capacity utilization at a given product ratio.
Okay, understood. One thing in call you highlighted that East volume growth is faster than North, because our assessment is, North is growing faster than East, at least in the near period, because of other issues in the East. So is it due to JK Lakshmi doing better in East, or you would say the industry is also behaving in a similar manner?
I'm talking of industry. If you see FY2024, East growth has been better than all other zones.
Okay, understood. Thank you. That's it.
Thank you.
Thank you. The next question is from the line of Tushar, who's an individual investor. Please go ahead.
Thanks for the opportunity, sir. Am I audible?
Yes.
So my first question is, what is the current status and timeline for the conveyor belt project?
So there are some, approval and procedural issues. That is why this is getting delayed. We are working on that. Difficult to give a timeline, but hopefully I think we'll resolve this very quickly within this quarter. But difficult to give a timeline as of yet.
Okay. And sir, my second question is on the 7 megawatt solar power project at Sirohi. It was reported earlier in quarter 2 and quarter 1 Concall and was to be commissioned in March 24. So what is the expected commissioning timeline for this project? And also if you can clarify, is this project company owned or tie-up?
Yeah, so solar power at Sirohi is on track, and that will get 7 megawatt power, solar power plant. That will get commissioned somewhere around, mid of March. You're right. That is what we told last time also.
Okay. Is this project company owned or just a tie-up, sir?
Yeah, so
it's a company owned. In Rajasthan, unfortunately, the state government policy doesn't allow any other mode other than the capex mode. So obviously, unfortunately, has to be that, as opposed to a possibility where it is pro-industry policies in Chhattisgarh. Rajasthan government doesn't have that policy. So even in fact in Udaipur, what was a third-party solar power, we had to convert that into a capex mode by buying that out. Otherwise, they impose those cross-subsidy charges and the electricity duty and all that, which doesn't make sense. So that's why it is in the capex mode.
Okay, sir. And just one last question. Can you please give us the timeline to reach from 4% TSR to 16% at Sirohi and our savings through this?
So, Sirohi, good news is that AFR project which we told you that we are putting up, so that is almost getting accomplished now. And now, in the last month, we have clocked about 11% of TSR, right? So, Sirohi, I think there has been a good improvement in terms of TSR improvement, right? One entire thing is get commission, then will reach about 13%, and that is what I think we planned for phase 1. Phase 2, our plan was to go to 16-17%, which will take it up later.
Any timeline for to reach 16 to 17%, sir, by when?
So I think we'll come back to you with the timeline once kind of plan was to do it in the FY25. So that is what I think we still believe that we'll be able to do that.
Okay. And this. Hello.
Sorry, you're not audible.
So our savings after reaching 16% TSR level, sir.
I think saving, will give you 28 to around 25 to 28 rupees saving which we have done.
Okay, sir. Thank you so much. That's all.
Thank you. Next question is from the line of Ronald Sioni from Sharekhan Limited. Please go ahead.
Yeah, good evening, sir, and congratulations on good set of numbers. Sir, I have only one question. If you can, share quarter 4 of FY23 restated numbers, after excluding the double counting of ECW and outsourced volume. That would greatly help.
We'll share it with you separately. We don't have readily for the fourth quarter.
Okay, sir. Thank you very much.
Thank you.
Thank you. Next question is from Naveen Sahadev from ICICI Securities. Please go ahead.
Yeah, thank you for the follow-up. Just one question, sir. This phase 2 or this expansion that we are doing in Durg now is a brownfield unit. So I was just curious to know why would you still budget at least 2 years for the completion of it. Is it possible that we advance it by at least a couple of quarters since it is brownfield, I'm saying, from that perspective? Just wanted to know your thought. Is there a reason why we are budgeting 2 years, or there is a possibility we can do it in 1.5? Thanks.
So yes, I think effort would be there to do it as fast as possible. Now the only critical activity is that equipment supply. For execution and other site work, we can do it very fast, no doubt about it. The only thing is how fast we can get all those equipments and accessories to put that plant up. That is what is going to be on critical path. So though our endeavor would be to do as fast as possible.
Understood. And I'm assuming orders are yet to be placed for equipment.
Now we are going to start that process because we took that board approval just in the last board meeting only. Now team is working on. So once we get the timeline and other things, definitely I think next call and thereafter we'll be updating you.
Great. All the very best, sir. Thank you. Thank you so much.
Thank you. The next question is from the line of Prateek Kumar from Jefferies. Please go ahead.
Yeah, hi sir. Thanks for the opportunity again. My question is on incentives. Partly is what was answered earlier. What is the annual incentive like we are looking currently, and how are you looking at incentives from expansions in Northeast any?
As of now, we don't have any incentive for our existing operations. Going forward, Durg also does not going to have anything. But for the split location, we'll be doing the liaising with the government and trying to get the incentive wherever in those states, UP, Bihar and Jharkhand, those are available as per the state policy.
And in Northeast operation?
Yeah, there also, as per the state policy, where whatever is available, we'll try to get those.
Sure, thank you. This was the only question.
Thank you.
Thank you. Due to time constraints, we'll be able to take the last two questions. We take the next question from the line of Rajesh Prasad Ravi from HDFC Securities. Please go ahead.
Hi, sir. Rajesh here. Sir, this value-added products, RMC and AAC blocks, they are manufactured captive or unit?
We are doing on a, some are captive, some are outsourced also.
Okay. So, when I look at your console purchase of trade goods, it's close to 130-140 crore on a quarterly basis. It's almost 8% of top line. So, how much of these would be cement traded goods and how much would be the value-added products? Broadly.
For which you are talking of?
So, last week quarter, if you look at the console purchase of goods, the P&L item, which is 130 to 140 crore every quarter. So, that would have only smaller amount from the value-added sales. Isn't 340 crore would be coming in from the value-added products?
We'll confirm that. I don't have the figure readily here.
What I'm trying to understand, purchase from goods, does it include cement purchases from outsourced units and hence volume was required which we have knocked off for the repeated volumes?
We'll come back, but you're right. It primarily would be the value-added product, but some could be this also. Because the purchase of clinker or cement, that could also be there.
Okay. How much was the margin and top line for the value-added you mentioned? Sorry, I missed that.
Top line I mentioned in this quarter was 134 crores. Margins are around 5%.
5%. And RMC, how much in that?
RMC was about 67 crores.
67 crores. Okay. Great, sir. That's all for my own time.
Thank you, Mr. Rath.
Thank you. The next question is from Shravan Shah from Dolat Capital. Please go ahead.
Yeah, thank you. Just a curiosity or maybe a request or a complaint. I posed my first question. I pressed the star one, but the people who asked the question after me were also given a question, again opportunity to ask the question, but I was allowed to ask at the last, so maybe one can think of. That's the request or complaint, whatever way you want to take it. My question is, in the fourth quarter, how much capex are we planning to do?
Shravan, you were the first in and also the last. I don't know how it incidentally happened also, but around.
Sir, it happened incidentally, sir. It is purposefully done. No issue, sir. You please answer my question.
Do purposefully, I don't know, but it is, I don't know. I'll let the operator comment on that, Vaibhav and his team. I won't comment on that. But as far as your question is concerned, how much capex? Now, JK Lakshmi, we would be doing around 250 crores in this quarter, mostly going for these projects which remain are to be completed, especially some major capex will go for the railway siding out of that 250. And another about 300 would go for the Udaipur. So maybe 500 crores in this quarter. 300, as I mentioned, 250 to around 250 JK Lakshmi and 300 Udaipur.
Okay. And sir, as on December, standalone, consol, gross debt and gross cash?
As of December?
Yeah.
We have a total debt of about 700 and on a standalone basis, 720 crores and cash about 675. So the net debt is around 50. And on a console basis, this number stands at close to 2,000 crores for the gross debt, cash of about 850. So 1150 is the net debt on 31st December 23.
Yeah, and this Durg 4.3 split grinding units, so 4.3 million, is it fair to assume that one can divide by 4, so it will be a 1.08 million grinding unit for each locations?
It is not 4.3, it is 4.6, right, first and foremost. Secondly, it will be 1.2 at 3 location and 1 million at 1 location, right?
1 million at which location, sir?
1 million at Jharkhand, I think. In Jharkhand we have done 1 million. And there is all other 3 places, 1.2 into 3.
Okay, got it. And in terms of the timeline, everything will be, as you mentioned, the 2 years. So for across all the grinding and the clinker will be mostly coming together at the same time.
No, we did not say that. We said the clinkerization and 2 grinding units will come in first phase in 2 years' time, and 2 grinding units split location would come 1 year later.
Thank you very much.
Thank you.
That was the last question. I would now like to hand the conference back to Mr. Vaibhav Agarwal for closing comments.
Thank you. So just to clarify the issue or the query highlighted by one of the participants on the call. So we, as a host of the call, we have to monitor the call as per the question queue, and we cannot allow long questions by a single participant and for any participant to take on the call for long minutes. So we have to handle the entire question queue, and we need to give a port to everyone in the queue. So that is the reason that a few participants might find it that they would not give sufficient time for asking their questions. This is as per the question queue built on the online platform. So this was the clarification of one of the queries by one of the participants on the call. So just one, I said, sir, just wanted to know that as per the peak company on consolidated basis, and what is the peak net to EBITDA you're targeting once you start commencing all your CapEx plans?
Vaibhav, I think, are you asking any question to us?
Yeah, I'm asking a question that what is the peak consolidated net that you are targeting, and what is the peak net to EBITDA that you are, as per your assessment, would be there for JK Lakshmi?
We are talking of peak debt because we are talking of a contracting a debt of about close to 2,500 crores over the next 3 years, and so we are expect the debt to increase by about 1,000 to 1,500 crores because over the 3 years period about 1,000 crores will get repaid also.
Right,
sir. So 1,500 crores debt would be there on a console basis. So if it is 2,000 crores today, so the peak would be anywhere between 3,500 crores or so thereabout. And our target for this would be to keep it net debt to EBITDA anywhere between less than 2.5 max.
Okay. That answers the question. Thank you so much, sir. Thank you, sir. On behalf of Phillip Capital India Private Limited, I thank the manager JK Lakshmi for the call, and many thanks to the participants in the call. Thank you very much, sir. You may now conclude the call. Thank you, sir. Thank you.
Thank you, Mr. Vaibhav.
Thank you, everyone. Thanks, everyone.
Thank you, everyone.
Thank you very much. On behalf of Phillip Capital India Private Limited, that concludes this conference. Thank you for joining us, ladies and gentlemen. You may now disconnect your lines.